This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May 18th, 2012. Our time is 8:39 Mountain, 10:39 Eastern. Radio show runs QR77 Calgary, 630 CHED Edmonton, AM 640 in Toronto. If you ever miss a radio show, they're archived on Harold's website, HESradio.com, also on rarecoloreddiamonds.com, and you can be a part of our podcast. I have an iMac. Even if you have a PC computer, you go to Apple, download iTunes, it's free, and then go to the World Financial Report on Radio podcast, download it, listen to it anytime you want. It is that simple. We've been saying for quite some time, we are in very serious financial times. We saw this week Greece is in serious, serious trouble. They could leave the Eurozone, which could trigger a potential Lehman-like event, could cost $1 trillion. There were bank runs in Greece and Spain. J.P. Morgan, they lost $2 billion. Now they're saying it's $3 billion, but it potentially could be much, much more as the trade has not been unwound. Harold, shades of the financial crisis back in 2008. And we saw at the beginning of the week, the stock market continue to go down. We saw commodities go down. Gold and silver, though, here in the last few days have caught fire as everyone is expecting quantitative easing 3. And I think it will happen here in the next few months. I'd be shocked if it doesn't.
You bet, Randy. I think you summed it up very nicely. Again, the financial markets worldwide are in disarray and very confusing and very concerning. Obviously, that situation with J.P. Morgan is extremely concerning, and we'll talk about that in a few minutes. But all in all, what we've seen is, especially for the last couple of weeks, is that the markets have come down substantially. The Dow has been down 10 out of the last 11 days. Gold has been down almost every day. So is silver. So is oil. It hasn't been a lot of fun, let's face it. For those of us that are invested in hard assets, gold and silver, been in the oil markets and that type of thing, it's been a battle. But the fact is that what we saw this week was probably very close, if not the bottom of the markets. If we all remember when silver hit $50 and gold hit $1,900, you saw the exchanges where these markets are traded. You see, all commodities, like stocks, are traded on exchanges. The stock market is traded in New York, obviously, in the U.S., the Dow Jones, and commodities are traded in Chicago and New York on different exchanges. Now, the gold and silver markets are traded primarily in New York on the COMEX exchange. And that's where the futures markets are traded. And basically, we saw gold drop from 1,900, which was its high, all the way down to 15 and a quarter that we hit this week. And we saw silver go from a high of 50 all the way down to 26.62. Now, this is the second time, and it happened this week, that silver hit that double bottom of 26.62. It hit it right on the button. And that's twice that it's come down to that level. And once it hit that level, silver and gold both skyrocketed. Yesterday, gold was up $35. That was on Thursday. And as we're taping the show on Friday, gold is up another $21. So it's literally gone from 15 and a quarter all the way back up to $1,600 in the past 2 days of trading. That's how quickly this market can move. Silver dropped down to 26.62, hit it right on the button, and then turned around from that point. And now the market, as we're trading, is trading back up at $29. We've seen a huge move in silver over the past couple days. Platinum's moving back up. It's at $14.65, up $10 on the day. Palladium market, which a lot of people are bullish on, up $7. It's at $613. Now, the oil market, we knew was going to be very volatile. I've been recommending oil for many, many, many years. I'm very bullish on oil. But understand, we're not traders here. We're not short-term traders that are buying in and out of the market on weakness or on strength. We're trying to pick a trend in the market. And there's no doubt that the trend in the market is up for gold, for silver, and for oil. Just because we've had a pullback in the market, there's various reasons for that, and we're going to explain that to you. But the trend has not been broken in any way, shape, or form, and the reasons for owning hard assets like gold, silver, diamonds has only gotten stronger. So number one, When silver hit $50, and it was in a frenzy, and gold was at 1900, what the heads of the exchanges did is they tried to slow down trading in these markets, and they raised the margin requirements. I don't want to confuse anybody, but basically the way that this works is that if you wanted to buy silver in the futures market, one contract of silver is 5,000 ounces. Let's say silver's trading at $30, and you buy 5,000 ounces of silver. That's $150,000 worth of silver. You can either pay $150,000 for it and take delivery of that silver, or you can put up what is called a goodwill deposit or margin requirement. Back then, when silver was back at $30 before it was making these gigantic moves, you could have bought that $150,000 worth of silver and only put up maybe $3,000 or $4,000 in which to do so. If silver moved up $1, you made $5,000 on a $3,000 to $4,000 investment. If silver moved up $5, you made $150,000 on it. $25,000 on it, and you only put up $3,000 or $4,000. However, if the market goes down, you have what is called a margin call. And if you only put up $3,000 or $4,000 and silver dropped $1 and you've got 5,000 ounces of it, you lost $5,000 and you have to come up with more money, which is called a margin call. We don't advocate trading in the futures markets. We're not traders here. We're buyers and holders of precious metals and diamonds for the long run because of the world financial markets. So basically the reason I'm bringing up the futures market to you is that when silver started going from 30 to 35 to 40 to 45 to 50, the exchanges tried to slow down speculation and trading, so they raised the margin requirements. Where it was $2,000 or $3,000 before, they raised it to $5,000, to $6,000, to $8,000, to $10,000, and this all happened in a very, very short period of time. In fact, they raised the margin requirements 5 or 6 times within 1 week, and it totally killed the gold and silver market. They accomplished what they wanted to do. They basically brought a market that was very heavy in speculation, moving extremely heavily, and they slowed it down to a crawl by making it more expensive for speculators to trade in that market. And what they basically did is force the market down from 50 all the way back down to $26 at a time when the fundamentals for the market have gotten stronger and stronger. The reasons for owning gold and silver are getting stronger and stronger, but again, it's just another example how the futures exchanges and how the powers that be, whether it be the SEC or the CFTC, the Commodity Futures Trading Commission, how these government organizations that are supposed to monitor the markets, how they allow these things to happen, to me is unconscionable. These are supposed to be free markets. These are supposed to be the type of markets where you put up your hard-earned money, you take a calculated risk. If you're right, you make money. If you're wrong, you lose money. But you shouldn't be in a situation where the government can step in and stop trading or change trading just because they don't like the way that the markets are traded. So basically, the fundamentals in gold and silver have not changed at all. In fact, they've gotten stronger. With the situations in Europe, the way some traders are looking at it is that Europe is going to go into a recession. They're already in a recession, and because people have less and less money to spend, the feeling is that that's why oil has dropped and certain commodities have dropped, because people in Europe don't have as much money. However, the real way you should be looking at this situation in Europe is that soon Greece is going to be off of the euro. They're going to have to go back to their old currency. Their old currency is worth about a quarter of what the euro is worth right now. That means everybody in Greece that converts their own currency or the euro back onto their old currency is going to find they're going to lose a quarter of what their net worth is. How frightening of a situation is that? That's called currency devaluation, and that's what's going on all over the world right now. You're going to see it in the United States. There's a very good chance by the summertime that we could see the American dollar devalued by as much as 20-30%. And by the way, that has happened before, about 20-some-odd years ago. So it happened before. It could easily happen again. It's also very possible that the U.S. dollar may no longer be the currency of choice for trading oil and commodities. How scary is that going to be? And it's already starting to happen, because we see China trading with Iran to get oil and trading their own currency, the yuan. And so is Russia doing that, and so is India doing that. So they're already starting to take hold of the situation, and many countries are starting to trade with Iran for oil using their own currency, not the U.S. dollar anymore. And the reason that that's happening is that the U.S. has put sanctions on Iran, which has crippled their economy, and basically Russia and China are extremely friendly with Iran, which is another very concerning situation. So all in all, what we're seeing right now is that those margin requirements that were so high back when silver hit 50, they're now starting to come back down again. They're making it much more reasonable to trade gold and silver. That's a good thing for us. Silver went from basically $26.62 on Wednesday all the way back up to $29 that is trading at today. The gold market the same, went down to 15 and a quarter, is now back up to $1,600, and that happened basically in 2 days of trading. Oil, we expect it to be very volatile because it's an election year in the United States, and with high oil prices, it makes the economy look even worse. So there's no doubt in my mind, and we talked about this, several times over the last couple months, that oil will remain very volatile. And again, it was at $110. It's trading right now at about 92, 93. My gut feeling is that it'll trade possibly as low as 85, possibly stop at 90, but as soon as war breaks out in the Middle East, which is going to happen, especially with Israel getting ready for it now, oil could go all the way to 200 and catch all the short traders with their pants down type of thing. So all in all, very enthused about what I'm seeing in the markets right now. Margin requirements are coming down. Gold and silver speculation is picking up. The fundamentals in the market are extremely strong. There's no doubt that even though we're going through a recession in Europe, it's going to cause massive inflation, which is why we're in the gold, silver, and diamond market anyways. The other situation is that if you look at the commitment of traders report, and again, I don't want to complicate things and make things sound more complicated what they are, but every week the exchanges come out with a commitment of traders report. It tells you how many traders are long the market, meaning the market's going to go up, and how many traders are short the market, meaning that they feel the market's going to go down. For the past few months, with the drop in the gold and silver market, the amount of short positions means that institutions that were betting that the market was going to drop in value was extremely high, and they forced the market down. But most of those positions are out of the market right now. In fact, if you look at the commitment of traders report, most of the short positions are gone. That means that the forces that were pushing the market down are now out of the market. So we feel that we could see a strong rally now coming in the gold and silver market again. Margin requirements are coming down, fundamentals are extremely strong, and the margin requirements again are going to help us. So all in all, I think we may have seen the bottom of the market on Wednesday in gold and silver, and now we could see a very strong rally coming back into the marketplace. So again, those that are on the sidelines or those that are waiting to buy, I think now is an excellent time to buy silver. Again, is it possible the market could drift lower? Of course it is. But all in all, the fundamentals for the market are extremely strong. The other situation that is extremely concerning, probably one of the most concerning things that are in the marketplace right now, is what J.P. Morgan is going through. If you remember in 2008, when the financial markets collapsed, it was because of Lehman going under, and they had these bad positions in the market in the forms of derivatives, and basically when Lehman went under, there was a run on the banks. And if the FDIC, the insurance company in the United States that insures your bank accounts, if they didn't raise the insurance from $100,000 on a bank account to $250,000, we would have seen about $4.5 trillion come out of the money market funds and would have destroyed the financial markets as we know them. All the banks, all the brokerage firms were leveraged about 30 to 1 back then, and when these markets started to fall, it destroyed and almost destroyed the financial system as we know it. What happened at that point is that the FDIC stepped in, they raised the insurance on a bank account to $250,000, and that slowed people down from taking the money out of the bank. And then the other situations happened when the stock market dropped from 14,000 all the way down to 6,500 because of Lehman going under. What happened at that point is the government came out and started putting money back into the economy. They put trillions of dollars back in. They bailed out companies like AIG Insurance and General Motors and Chrysler and all the major banks, Citibanks and all those companies, and they even bailed out companies like McDonald's and other companies like that, and they put trillions of dollars back into the marketplace. That seemed to have stabilized the market for a while. However, we're now getting back into the same situation again. By the way, when they put money back into the system, into the economy, it was called quantitative easing 1 and quantitative easing 2. And by doing so, by putting that trillion or $2 trillion or $3 trillion into the marketplace and bailed out these companies, it stabilized the markets. And that's when the stock market went back up from 6,500 to the 13,000 that we were recently at. And that's what caused gold and silver to go from lower levels all the way up to the highs that we saw, $50 silver and $1,900 gold. We're now in an almost identical situation again, so be very, very careful, because that situation with JP Morgan is not just a trading error, it's a derivatives error. And we've been saying for the last 5 years that these derivatives, that most people don't even understand how they work and they're very heavily leveraged, can destroy the financial system the same way as it almost did in 2008. And now is the first inkling of what we've been talking about. JP Morgan cannot get out of their derivative markets. They lost $2 to $3 billion on that one trade in 1 or 2 days, and they still don't know what they're doing. It could be $4 or $5 billion, and believe me, they are not the only brokerage firm and bank that is using derivatives. Derivatives are in the trillions and trillions and trillions of dollars, and I have always felt that that was the one area that was capable of bringing down the world economy again, and now we're starting to get signs of this. Ladies and gentlemen, these are the most dangerous times that we have ever seen. For those of us that have not been through the Great Depression, that are not old enough to have lived through the 1929 to 1935 Depression, this is as close as we could possibly see. We could look at the destruction of certain countries in Europe, we could look at the destruction of currencies in Europe, and we could see the same thing happen with the United States. They owe $15 trillion that they can't pay back, and an economy that is stagnant at this point. I'm thinking that we're going to see quantitative easing 3 coming up within the next few months. It will catch the markets by surprise. It will rally the market in gold and silver to levels that we have not seen before. Gold could go to $2,500. Silver could go to $100. Basically, silver's trading below 30, and gold is trading below 1,600. I think that at this point, the smartest things that we could do, because these are very, very dangerous times and extremely dangerous markets, we want to own physical gold. We do not want to trade the futures markets in heavy leverage. We want to trade physical gold, physical silver, and own some very rare diamonds, which we'll talk about later on in the show. Reduce your risk, don't speculate, and keep some cash on hand. My opinion, stocks are not the place to have your money. It's extremely risky. And again, in 2008, the Dow Jones dropped from 14,000 to 6,500 and wiped out all investors. The same scenario could happen within the next year to 2 years. The only thing, in my opinion, that's holding the stock market up right now is the fact that it's an election year and they're doing everything that they can to get President Obama reelected. I would be very, very cautious going forward if I was you. We've been doing this show. This is the 501st show that we have done. We have never, ever missed a radio show in 10 years, and the reason that we take our business so serious is because it is serious. We're hard-working Canadians, and let's face it, we're not the Warren Buffetts of the world. We don't have billions of dollars. We're hard-working Canadians that may have had a little bit of success and put away a little bit of money, and all we want to do is make the right moves for our family. The smart thing at this point is to own physical gold, physical silver, get into the diamond market, and reduce your risks in other markets.
And during that 10 years, there have been some people who have heard our show and said, wow, these guys are really negative. But if you look at Harold's track record, he has been very accurate, and people have made a lot of money off his prognostications. As I've said many times, it's not about being a cheerleader. It's not about optimism. It's not about pessimism. It's about realism. And our show has been focused on the realism of our situation that we find ourselves in. That is the only way we will survive, get through this, and hopefully prosper at the same time. We're in an economic time where even if you just maintain your wealth, you're doing well. It's very difficult to make money in these financial times. Those that are in hard assets have done very, very well. And the one company that Harold has recommended for 10 years that you should speak with when it comes to investing in precious metals, it's the only company he recommends, Worldwide Precious Metals, a Canadian company out of Vancouver. Their telephone number, 1-866-623-2002, 1-866-623-2002. Their website, wwpmc.com. They're going to be in Edmonton and area. Contact them if you would like to sit down and learn more about investing in precious metals, gold, silver, platinum, palladium. They're going to be in Edmonton shortly. Give them a call, speak with them, get your name on the list for our free weekly newsletter, the companion to our radio show. It's a must-read every week. You can go through it in 10, 15 minutes, or you can spend hours. It's up to you, but it's a must-read. Get the newsletter from Worldwide sent to you free of charge. Meet with them when they're in the Edmonton area. The telephone number, 1-866-623-2002. The website, wwpmc.com. I thought Harold's analysis, we have about 2 minutes left here in our segment, of the in the first section of our show, is one of the best he has ever given. Really a great rundown of what is happening. We have a financial crisis that is not over, as proven by J.P. Morgan. J.P. Morgan could continue to lose a lot more money from the reports we have in our newsletter. This trade is not unwound. The sovereign debt crisis continues with Greece. We said in the past it was not over. They were just kicking the can down the road. As well, Spain is in serious trouble. You could find a solution with Greece and then have to deal with Spain. And then maybe Portugal, Italy, Ireland. It continues to go on and on. And then the geopolitical aspect is something we did not touch on, and that is Iran, Israel. Reports coming out this week, and we have them in our newsletter. Israel contemplating when they are going to attack. It could happen very, very soon, the attack on Iran. If that happens, we could see oil prices spike. I suspect we'll see gold and silver spike. It's a time where people need to be very, very cautious. And as Harold was touching on regarding futures contracts when it comes to precious metals, there's a paper market, which is the futures market, and then there's a physical market. And during this time, even as precious metals have pulled back, there has been strong buying all around the world. In India, in China, all around the world, there has been very, very strong buying. One of the interesting quotes we have in our newsletter this week comes from John Embry from Sprott Asset Management out of Toronto, strong advocate for gold and silver for quite some time. He says, I would defer to Jim Sinclair, another great gold and silver analyst. He says, who I have the utmost respect for on this. He said, for a long time that the derivative situation, J.P. Morgan situation, guarantees quantitative easing to infinity, which was one of the greatest statements of all time. I think this J.P. Morgan revelation just confirms that basically everything Jim has been saying for a long time, that he's dead right on the subject. The fact is, we're going to have quantitative easing to infinity, which would suggest that an intelligent person would be buying every single ounce of gold and silver that they could get their hands on at these prices based on that scenario. Austerity, quantitative easing, governments have some very difficult choices ahead of them, but you need to be prepared with hard assets in your portfolio. Speak with Worldwide about investing in gold and silver, 1-866-623-2002, website wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show May 18th, 2012. Our time is 9:05 Mountain, 11:05 Eastern. Long weekend here in Canada. We'll enjoy a long weekend. Next weekend in the United States, they have a long weekend. The radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR77 in Calgary. If you ever miss a radio show, they're archived on Herald's website, hesradio.com, rarecoloreddiamonds.com, and they're podcasted as well. Sign up for the podcast. Get iTunes on your computer. It's very simple to download and install. Go to podcasts, type in the World Financial Report. You just click on it, and every week our show will come in. It is very, very easy to do, and then you will never miss a radio show if you, for whatever reason, don't catch us on the air. There's only one company Harold recommends you use when it comes to investing in precious metals. They're Worldwide Precious Metals, a Canadian company out of Vancouver. Been in business over 10 years, celebrating 10 years in business. Their telephone number, 1-866-623-2002. The website, wwpmc.com. They're going to be in Edmonton, an area here in the next little while. If you would like to meet with them while they're in Edmonton, give them a call, 1-866-623-2002, or go to their website. You can connect with them there. Harold has an auction coming up on May 22nd, 8 p.m. Eastern, 6 p.m. Mountain, hsfineauctions.com, the website. This, I believe, now will be the fifth auction. They have all been a tremendous success. People from all over the world taking part in them. It's been very, very exciting. So plan to be a part of that on May 22nd. hsfineauctions.com has a major auction, and you can see the catalog online, also in our newsletter. If you'd like to get the newsletter from Harold, he'll be happy to send it out to him. You can connect with him at hsfineauctions.com, rarecoloreddiamonds.com, or call him at 1-800-432-1022. It was a very exciting week in the world of diamonds. In fact, there was an auction. I should mention first, though, quickly, our featured diamond of the week. This week's diamond is a 10.01 carat radiant cut, fancy intense, yellow, internally flawless diamond. And keep that in mind, because you'll want to speak with Harold about it. You'll want to have that as an investment in your portfolio. There was an auction this week in Geneva. Magnificent Jewels and Noble Jewels from Sotheby's, May 14th and 15th. And they had an auction, and one of the diamonds that went was a yellow diamond, property of the collection of the Prince of Corsini, a gift from Bonnie Prince Charlie. It was a fancy deep yellow diamond and diamond brooch, and the carat was 7.33 carats. The estimate on it was $300,000 to $500,000. It sold for close to $1 million. And we have auction results. Harold will be happy to send them out to you. It amazes me how many of the diamonds selling now are yellow diamonds. It's very, very exciting. In fact, this week, the legendary Bosansi diamond sold for $9.57 million at Sotheby's. And if I remember correctly, the estimate on it was substantially lower. In fact, it was $1.9 to $3.9 million. It went for $9.6 million. There is an amazing story that we have in our newsletter. For the rich, diamonds are the new stocks. You'll want to take a look at that as well. Harold, it's a very, very exciting time in the world of diamonds. Also, with your auction site, I know that you're very excited and passionate about both subjects.
You better believe it. I'm so excited about the auction coming up on Tuesday, and we'll go over that in a couple minutes. You know, you brought up yellow diamonds. Before we started offering yellow diamonds to our clients as investments, nobody ever even talked about these diamonds before. So the fact is, over the last 7 or 8 years, we've seen a tremendous growth in the market and people becoming much, much more aware as to the investments in rare colored diamonds. Now, what you just said before, Randy, was that there was a yellow diamond under 8 carats, around 7.5 carats, and it sold for close to $1 million, even though the value of it was just under $500,000. Now, that was a 7.5 carat diamond. The featured diamond this week is one of the rarest yellow diamonds you'll ever see in your lifetime. It's over 10 carats, so it's larger than the diamond that was just auctioned off. This is a fancy intense yellow, which is a magnificent color, and it's internally flawless, one of the best diamonds you could possibly buy. This diamond sells for under $500,000. However, it's bigger than the diamond that just sold for over $1 million. So you hold on to this diamond for 4 or 5 years, and you're talking about an investment diamond that will go up 3, 4, 5 times possibly what we paid for it if the inflation levels hit the levels that we think it's going to be. In fact, yellow flawless diamonds are one of the greatest investments you can make. Number one, they're extremely rare. To get a flawless yellow diamond is nearly impossible today, except through us. We invested tremendously in yellow flawless diamonds for our clients. So if you go on my website, rarecoloreddiamonds.com, and go to the loose diamond section and look at our yellows, we have 4 different colors of yellow diamonds. The fancy light yellows, the fancy yellows, the fancy intense yellows, and the fancy vivid yellows. These are the diamonds that you want to own. They start at about $15,000 and go up from there. These diamonds double in price every 4 years. So basically they go up by 25% a year. They never ever drop in price. There's never been a time where the price of internally flawless yellow diamonds has dropped because there's so few of them, maybe 100 available a year for the entire world. So you're talking about phenomenal investment diamonds. However, where does somebody go if they bought a yellow flawless diamond that's 1 or 2 carats? Christie's and Sotheby's sell diamonds, or auction off diamonds, but in most cases they're very substantial diamonds like the ones that Randy mentioned today. That's why we built 8 Siegel Fine Auctions. 8 Siegel Fine Auctions was built for our Canadian clients to resell their high-end collectibles and diamonds. It's a live auction site. It's never, ever been built before. Nothing like it has ever been attempted before, because when I built this website, I insisted that it had to be live, meaning me selling every single piece. I've got a tremendous passion for diamonds and for gold and silver coins. I've been in business for 35 years, and I eat, sleep, and drink this business. So basically, when you look at our website, you're going to see diamonds that you will never see anywhere else. Our yellow flawless diamonds, our argyle pink diamonds. By next week, there's going to be probably 10 or 15 green diamonds. Amongst the rarest diamonds in the world are green diamonds. There will be blue diamonds up there, and some of them so ridiculously rare that are in the multi-millions of dollars. There's red diamonds, which are the rarest of all diamonds. They start at $2.5 million a carat. But in all honesty, most of my clients that invest in diamonds are not buying multi-million-dollar diamonds. In fact, you don't have to spend millions of dollars to make money in the rare color diamond market. Yellow flawless diamonds start at $15,000 a carat and go up from there. And those are the diamonds that we recommend mostly to our clients. They're very safe. They never drop in price. They double every 4 years. But here's the exciting thing. During times of high inflation, these are the diamonds that went up 500% in 2 years. When gold went to $850 and silver went to $52, these diamonds went up 500% in 2 years, just because of inflation. The reason that we've been recommending gold, silver, and diamonds for the last decade is because we believe inflation is going to skyrocket because of what's happening in Europe with the oil market and what's happening in the U.S. So they're a great hedge against inflation, but they don't trade like commodities and stocks. There's no up and down movements to the market because they don't trade on exchanges. So basically, it's a longer-term investment. You want to buy a diamond and hold on to it for the next 5 to 10 years. We ship the diamond directly to you. They're all GIA-certified diamonds, meaning that every diamond that you buy through my company, they're all certified by the Gemological Institute of America, which is a nonprofit organization in New York that grades diamonds. You never, ever buy a diamond that does not have a GIA report. So, yellow flawless diamonds are a tremendous, tremendous asset to own. The Europeans call it real estate in your pocket. Basically, you could put a diamond in your pocket and nobody would even know that you have it. They're that small. But you could walk around with multi-millions of dollars worth of diamonds in your pocket and cross a border and nobody would even know about it. But try to cross a border with more than $10,000 in cash and see what happens. We happen to live in a world right now where countries are going bankrupt, where currencies are being devalued, and this is the only asset that can be sold in other currencies. It's portable, transferable wealth. It never, ever falls in price. These are the same diamonds that I've given to my children when they were growing up, and now that I have 3 grandchildren, by the way. I had a beautiful little granddaughter last week. Her name is Viviana. She's absolutely gorgeous, and she has a little yellow flawless diamond tucked away in the safety deposit box for her future. So those of us that are grandparents that, that have the money, that want to take care of our grandchildren and children, this is an amazing asset to own. You know, we put money away in retirement savings plans, and in most cases, you lose on those investments. The stock markets around the world are so risky right now. The stock market in the United States and in Canada, the TSX, has dropped 10 out of the last 11 days. And with this problem that J.P. Morgan is going through in these derivatives and credit default swaps and everything like that, the markets are not safe anymore. And if that's where you have your retirement money, I would suggest that that's not an area to put your money. You want to be safe, and you want to have some assets that you can put away that nobody knows that you own, that are portable private wealth, that can be sold in other currencies, that respond to inflation and have no downside potential. And that's the yellow flawless diamond market. Again, I know that this 10-carat diamond that we're featuring this week is not for everybody. It's a $500,000 diamond, but it's bigger than the diamond that sold for $10 million, that just sold for $1 million, and it's half the price of that. And that diamond in the next 5 years could easily be worth anywhere from $1 million to $2 million. And again, it's a 10-carat flawless intense yellow, one of the most beautiful yellow diamonds in existence today. And for those that really want to step up to the plate, I've got a 30-carat intense yellow flawless diamond coming up for sale within the next couple weeks. We also have introduced, even though we deal primarily in flawless diamonds that are colored, we also deal now in D-flawless whites, amongst the rarest diamonds in the world. 0.001% of all diamonds found are D-flawless white diamonds. They're ridiculously rare and go up tremendously in value. We have a couple of them on the website right now, but over the weekend and next week, there'll probably be 10 or 15 of these D-flawless whites that are in such tremendous demand and are so valuable. I mean, these are the diamonds that you want to own for investment purposes if you're into white diamonds. And I've got a 5-carat and a 6-carat D-flawless white going on up on the website next week. And again, you will never see diamonds like this anywhere else. Along with the fact that we're the only company that can resell your diamonds for you, as we own our own auction business, and we built that for our clients to resell their diamonds. So you've got an amazing featured diamond. You've probably got close to 100 yellow flawless diamonds on the website to choose from, that start from $15,000 and go up from there. You want to buy these diamonds for investment purposes, for safety, and to put away for your children's education and their security going forward. On top of that, we have 8 Siegel Fine Auctions coming up on on Tuesday, which is the 22nd. And let me just briefly outline to you what is going to be offered at this amazing auction. And this is the second last auction coming up. We'll take a break during the summer because most people go away in the summer, especially in Europe. If you go to HS, that stands for Harold Siegel, hsfineauctions with an S.com, look at the catalog first. There's going to be a Finland Euro triple set. Once the euro is gone, these sets will skyrocket in price. There's a loose Comfort Tiffany silver coin with Tiffany painted glass. It's an amazing coin that you will not believe. There's a video on it. There's gold coin sets coming up. The 4-coin Wildcats of South Africa that has a 1 ounce, half ounce, quarter ounce, and tenth of an ounce of 24 karat gold. These are numbered pieces. There's a 10-ounce silver coin coming up for sale. There's a 1-ounce platinum coin from Australia coming up. And then there's a 0.5 carat vivid yellow flawless diamond coming up for sale that will take your breath away. Watch the video on that. There's a 101 D flawless white diamond coming up for sale, valued at $75,000. There's a 2.75 carat intense yellow internally flawless diamond ring that is so beautiful. There's an appraisal. It's appraised at $100,000. There's a 114 fancy bluish green, one of the rarest diamonds you'll ever see in your lifetime. We just repolished this diamond. It looks like a deep blue diamond. It's stunning. It's got a value of $140,000 with an appraisal. There's 4 Argyle pink diamonds coming up for sale. Argyle pinks are amongst the best investment diamonds in the world because the Argyle mine in Australia produces 90% of the world's pink diamonds, and it's going to close soon, and these diamonds can go up 10 times what today's prices are. The diamond that you really want to watch is the vivid pink Argyle. It's a 32-pointer, one of the best diamonds you could ever buy, and the rarest diamond on the board is a 61-point radiant cut, fancy intense, purple pink diamond. Purple. When you look at the video of this diamond, you will not believe what you're looking at, and that diamond is valued at $150,000. So again, there's something for everybody in here. That yellow diamond, will probably sell in about the $20,000 to $25,000 range. There's some amazing diamonds up for sale, and again, we are the only company that not only can offer you and deliver to you the best investment diamonds starting at $15,000, but on top of that, we're the only company that can resell it for you with our own auction business that we built for our clients. So again, I couldn't be more excited to have brought diamonds to you 7-8 years ago. Most of my clients, along with my family, own these as very safe investments that not only will protect what you have, but will respond to inflation in a tremendous way and can make you a fortune of money. Again, look at our website, rarecoloreddiamonds.com. Go on it over the weekend. And by the way, over the next 2 weeks, you will see in the jewelry section, we will have as much as $40 to $50 million worth of diamond jewelry on our website. And if you look at what's happening at auction, what sells for the most amount of money is colored diamond jewelry, and we have the best that money can buy, including bracelets and necklaces that go up to 100 carats. So, again, I've never been more excited about what we have to offer to our listeners and to our clients. These are amongst the best investments you can make during the most difficult and frightening times. Again, make sure that you attend our auction on Tuesday, right after the long weekend. It's going to be at 6 o'clock Mountain Time, 8 o'clock Eastern Time, and it's going to be one of the best auctions we've ever had. We're offering some amazing items, including a 61-point fancy intense purple pink argyle. Again, it will take your breath away. Randy, I've never been more excited about anything like the diamond market and what's been happening at auction. Again, the auction results have just been outstanding, and we were the ones that brought yellow flawless and pink diamonds to the forefront.
Well, let's talk about that, Harold. I'm glad you brought it up, because Sotheby's Magnificent Jewels and Noble sale earlier in the week had, and this is lot 731, an important and rare fancy intense purple pink diamond and ruby ring. And the size of it was 51.5 here, if I'm reading it correctly. The estimate on it was 1.9 to 3.9. It sold for $5.4 million. That is a rare, fancy, intense purple pink diamond. To give you an idea of what the potential is in relation to where Harold is offering at auction on Tuesday. Also, this is 102, fancy yellow diamond ring. And this is a fancy yellow diamond. The estimate on this was $50,000 to $60,000. It went for just under $100,000. Wow. So this is what we're talking about here. Harold has the yellow diamonds, the purple pink. You can check everything out online at hsfineauctions.com. The catalog is in our newsletter as well. Get the auction results from Harold this week. They are a must-read. The Sotheby's auction was simply amazing, some of the results that they had. And we also have some other stories. As I touched on, CNBC came out with an article, and this article was simply amazing. It talked about the rich turning to diamonds. In fact, the title of it was, "For the Rich, Diamonds Are the New Stocks." That article is a must-read. We also have an article on the legendary Bosansi diamond selling, and that 7-carat fancy yellow diamond we talked about selling for close to $1 million. It is a very, very exciting time in the world of diamonds, and you want to speak with the man who brought it all to our attention, and that is Harold Siegel. Back 7 years ago, he was the one to bring rare-colored diamonds to our attention via our radio show. He set up the website, rarecoloreddiamonds.com, and you can connect with him at 1-800-432-1022 and take a look at the diamonds on the website. And reiterating again, hsfineauctions.com, having an auction on May 22nd, 8 Eastern, 6 p.m. Mountain. And Harold, one of the things we are seeing, we know that people listen to our radio show around the world via the internet and our podcast. And the last auction had a lot of participation from Europe. So people are starting to realize that this website and what you have much coveted, and there's interest from all over the world.
Which is so exciting because, again, what we've always said is that diamonds could be sold in any currency. And again, proven at last auction was when mostly the Europeans bought our diamonds because they paid with British pounds, and there was a 35 to 40% benefit to them in the currency. So the same thing will happen when we sell our clients diamonds overseas, is that our clients will end up getting more money for them because of the currency situation. So again, I've never been more proud of anything that I've ever built. The auction site in rare colored diamonds, you're going to see the most beautiful diamonds you've ever seen. And again, we're the only company that can not only deliver these amazing investment diamonds to you, but we will also sell the diamonds for you when the time is right to do so. That's how we make our money. When you sell your diamond through us, through my auction company, we get 10% of the profit only. So if you bought a diamond for $20,000 and sold it for $100,000 and made an $80,000 return, we get 10% of the $80,000 and you get all of the rest. Again, we built HS Fine Auctions for our clients to resell their high-end collectibles. To give you an idea, 5-6 years ago, a client bought a 1 kilo Libertad Mexican coin from us for $1,500, a beautiful 32.15 troy ounce pure silver coin, and recently sold that same coin on our auction site for $4,200, making a 300% return. So again, I've never been more proud of anything that we built. We're in extremely difficult times, very confusing and very dangerous. Make certain that you have some diamonds put away. In fact, we have many clients right now that are buying multiple diamonds. They would say to me, am I better off buying a diamond for $100,000 or buying 5 $20,000 diamonds? And while they still last, you want to get as many of the yellow flawless diamonds in your portfolio that you can. You may have to use them for currency or barter or whatever, but again, these are the only assets that never ever fall in price.
Well, when you have a scenario like Greece, where they potentially could leave the Eurozone, you could have a Lehman-type event. It is very frightening to think about that possibility as well. You have had runs on banks in Greece and Spain. In fact, the EU has, the ECB has actually stopped funding some Greek banks. So how long will they last? We have a story in our newsletter as well. One of the politicians in Greece saying that we're going to run out of money very soon unless we get everything organized. They have another election coming up on June 17th. So it is a real strange time. And you add in J.P. Morgan, where they have these derivative contracts that are losing them unlimited amounts of money at this point. What would you rather have, a crazy derivative contract that's losing billions of dollars, or a diamond in your hand, or gold and silver? I think the average person knows the answer to that. All you need to do is connect with Worldwide Precious Metals to learn about investing in precious metals, wwpmc.com. They're going to be in Edmonton and area. If you'd like to connect with them, well, they're here. Give them a call, 1-866-623-2002. The website, wwpmc.com. Harold's website is rarecoloreddiamonds.com. Telephone number 1-800-432-1022. An HS Fine Auctions auction coming up May 22nd, 8 p.m. Eastern, 6 p.m. Mountain. One story I wanted to get to just before the end of the show from Stephen Lieb. He says, we are in a real mess, and it cannot be sorted out in any meaningful way. It's a matter of when people wake up and start fleeing to hard assets. I assure you that 5 years from now, when you look back at this period in hard assets, it won't look like anything on the chart. But living through this kind of pain is very difficult because you see how it's going to work out, but you don't know the exact timing. You may see a situation where gold is at $1,500 and then 2 months later it's at $2,500. That's just one of the many possible scenarios. We don't know the bottom for sure right now, but one thing is certain. You're going to see new highs in gold. Investors just need to hang in there. He says you're going to have a massive move into real assets. There's no doubt about it. If investors step back and look at this from a long-term perspective, they will realize politicians feel the only way out of this mess is to print more money. After printing money will come inflation. It will be higher inflation than anything we've ever seen since World War II, and it will send hard assets and all commodities skyrocketing. But he says, I can't deny that this has been a painful period, this transition that's going on, as we've seen a bit of a pullback in precious metals and commodities during this euro crisis crisis and during the financial crisis. Harold, we have about a minute left. Hope everyone has a great long weekend.
You bet. Hopefully the weather will be beautiful, and again, we all deserve a nice long weekend, so have a wonderful weekend, and enjoy the radio show, and we wish everybody a very profitable day.
Thank you, Harold. To connect with Harold regarding the auction, HS Fine Auctions, next auction, May 22nd, this coming Tuesday, 8 p.m. Eastern, 6 p.m. Mountain. You can see the catalog online. RareColoredDiamonds.com, diamond telephone number 1-800-432-1022, and Worldwide Precious Metals in Edmonton and area. Very, very soon. If you'd like to connect with them while they're here, wwpmc.com, or speak with them about investing in gold and silver, 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.